Good morning. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good morning, Pete.
Good morning, Andrew.
Getting close to that time of the year.
Sure is. Yep.
We'll do a final wrap for the year. So there's been plenty going on throughout the year. Obviously, interest rates went through the roof, inflation went through the roof, banking crisis, and then the political events in the Ukraine and Israel. And then
it all unfolded.
It is, and then some markets have pretty much ended up where they started the year. But we'll touch on a few of those now.
Sure.
The Australian employment data came out last week. They were expecting only a very minimal increase in the change in employment. It actually came in at 61,000, which they were expecting about 10,000.
Yeah, the forecast was 10,
Big,
incredible. Sure was.
Big move.
Well, everyone, again, it's that time of the year, and this is when you need staff due to all the Christmas parties and everything else. So it's a good sign.
Yeah, and I think we've sort of spoke about it most of the year, not only here but in the US as well, but these labour markets have been so resilient throughout the year, and we understand that it is a lagging indicator. But I tell you what, they haven't budged really.
No, I got to agree with you, certainly.
Let's move to the UK. The GDP numbers will come out later this week, which is expecting a negative for the month. This is like a rolling 3-month figure, and that chart looks as though it's missing a couple of bars there, but it is not. It is the last 2 months of rolling is 0 and 0.
0, and it'd be interesting to see what this month is.
So you sort of think, like, we understand the UK is struggling.
That it is.
Interest rates are still relatively high. CPI is sticky, which we'll touch on shortly. Now, it is coming down significantly, but to get to that target range of 2%, it's still got to drop about 2.5%.
Yep. Well, it might happen sometime again if you see that energy prices stay where they are, Andrew. That may be down another % by, say, April or May. We've just got to see. And then many central banks are talking about 24 is going to be a pullback as far as rate policy. So maybe the POMs are going to do it as well. We'll just see how it all falls.
Yeah, and all those rate announcements last week, unchanged, which was not surprising.
No, it's not surprising, but everyone seems to have a differing view across the Fed, don't they? The presidents, and then you've got, they watered down Jay Powell and he waters down the others. So let's see how it rolls.
Yeah, but no, you would sort of think that in all these advanced economies, interest rates, well, maybe not Australia, but interest rates have probably peaked, you would think.
You would think so.
Yeah. US dollar, 102.5.
Yep.
Slightly down on where it started the year, but it's been a fairly, I wouldn't say a bumpy ride, but a great ride for traders.
You bet. And there, 102.51, I think that you'd have to say that possibly that US dollar index, and it's right on that target right now, but there's every chance you could be at a 101 handle by the end of the year due to the downdraft and just the continuation as far as softness for the dollar. So, see how it rolls, but it has been an almighty currency. Every currency's been dynamic against it.
Yeah, and it's particularly all those risk-on currencies has given them a boost.
Hasn't it?
Not because they've strengthened, but pretty much because the
US
US dollar
capitulated.
has weakened. Yeah, so now another market which has been pretty incredible this year, the interest rate market in the States, the Treasuries, the 2s and the 10s.
Yeah.
Like we had that banking crisis back in March where rates fell off a cliff, and then they just continued to climb higher throughout the year, and they've certainly come off in the last few weeks, particularly on the back of the comments from the Fed.
You bet. And I'll tell you, that'd be a great chart. If you're a trader at home, you overlay that one over your US dollar index, and that would give you a great, I think, directional play where you're thinking as far as movement. So, they're the little tools that traders need to be conscious of, what to lay over what, and what to compare to what, and then you just get a really nice picture as far as where does 24 start to blast off.
Yeah, I think if you did that overlay, it'd probably be a fairly similar chart, I would suspect.
I would think so as well.
And you might put the Nasdaq and the S&P on there, and it's probably the complete opposite. So.
Yeah. Well, they're the tricks of the trade. You've got to use those as far as correlations and how it all manifests in the sense of performance.
Yeah, for sure. Once again, a couple of slides to finish up. Gross debt as a percentage of GDP. Obviously Japan has always sort of been up there, which is not surprising, but you look at the bulk of those other countries there, and most are from Europe, or continental Europe. So.
Yes, 21 countries, and when you weigh it all up, how long does the euro survive? Cyprus there at 79%, the UK at 104. Yeah, they're big numbers, aren't they? Debt to GDP. Australia's out of there, but even Germany, the powerhouse of Germany, 66%. So yeah, I just have to wait and see how long the euro sticks around, and maybe that could be a very strong indicator of how it's the fragility of it.
Yeah, and I think also we touched on it last week as well. Just the outstanding global debt, which is just an enormous number.
Yep.
Is that going to be the thing that can potentially
unravel?
Yeah, at some point in time, and be that sort of black swan event that we've spoken about. So time will tell, but
time will.
I suspect that's probably been spoken about for 10 years.
Well, at least.
And it just keeps growing.
It does, and there will be a judgment day. We keep on saying it, so we don't know when, but one day it will happen.
Yes, and it'll probably come completely out of the blue. So
normally does.
Finally, just to look at a few of these equity markets throughout the year. So the year to date there, obviously the Dow and the S&P have jumped quite a bit only in the last sort of 3 to 4 weeks. Obviously the Nasdaq was pretty much hot all year, but those two others have crept up. ASX, not a lot to talk about there. Once again, that was flat probably a month ago.
That's right.
FTSE is horrible. McGuire's been strong this year, but if you look at over that 5-year period, once again, those US markets have been a clear standout.
Yeah, and S&P is just dynamic, and then you go roll it across to the Nasdaq, and wow. So it's you can't argue with the numbers.
No,
the numbers tell the story, and for everyone out there, as far as how you trade that. I think 24 is going to offer many opportunities across that sector and a continuation as far as earnings.
Yeah, and it's sort of interesting. You look at the Nasdaq, and everyone talks about how bullish it was this year, but you've got to remember it was down about 30% last year.
Oh, well, it went down to 10,000 from 14,000.
So it went down a huge
or
way.
16 to 10 or something.
Yeah. So if you look at sort of last year down 30,000, this year up down 30%. This year up 42%. Then over a 2-year period,
that's line ball.
It's pretty average.
Yes.
So can that continue next year? It probably will creep up next year. The tech stocks probably won't go through the roof. Well, that's probably near impossible. The
continuation of those parabolic earnings.
But do all those other companies that have been lagging in both the Nasdaq and the S&P, do they play a bit of catch up next year, and you get another positive year? But once again, it's those unforeseen events which can throw a spanner in the works. But
sure,
it's certainly some interesting numbers there. But
you bet.
Yeah, but anyway, so we'll keep an eye on things leading into Christmas. Still bits and pieces coming through, but
100%. Yeah, always the data drops. And oil next year, how that plays, US production, what happens with gold. A couple of things, gold. Just when you look at those numbers, 800 tons, not million tons, 800 tons of central bank buying this year, and it's I think the most in that 3-quarter window. Last quarter was about 331 tons globally, so that's an enormous amount of gold.
No, there's plenty of activity in the markets, and I think, particularly you say oil as well, that's been an incredible market all year as well. So it's sort of lagging at the moment because of probably more geopolitical events more than anything else, but these markets have certainly, they never disappoint.
No, they don't. And I think 24 is lining up to be one great year to trade, and got a lot of surprises over the calendar year. So, and culminating, of course, with the US election. So, it's going to be game on, Andrew.
Yeah, it'll be interesting to go down the election path again. So
I'm looking forward to sharing that with you. So, it comes around every 4 years, and it just throws another spanner in the works normally.
It certainly does. But anyway, all right. Well, thanks again.
Thank you.
Happy Christmas.
Merry Christmas, and to all the viewers, thank you. And we'll see each other again. Do we see everyone before New Year's Eve?
We'll see.
Okay,
we might be able to squeeze one in. So,
all right.
Yeah, but that's good. But thanks again, Pete.
Thank you, Andrew.
Okay. And that's the XM.com weekly market update.